Hi friends. It's hard to imagine as we sit here today that nearly every one of the 50 states has begun to open up in some way, obviously at a different pace and with different precautions, but here we sit from just 2 weeks ago, every state was shut down, now virtually every state is open in some way. And as you've been paying attention to the markets are within about 10% of where we started this year. It's also hard to imagine that we are, as a society, both here as Americans and as a globally connected society, that we are within an earshot economically of where we were just 5 or 6 months ago. And so the question has been posed to us, that's a fair question: why has the stock market continued to go up? Now, as you've watched our previous videos, you know that we are pretty strong in our belief of the American economy recovery. We think that's a U-shaped recovery, and it's an 18 to 24 month window. So what gives, so to speak? Well, I think there's 4 basic reasons why the stock market has continued to go up, even in the face of tremendous economic data that's been virtually all negative. And here they are. Number 1 is, imagine with me if this pandemic and this global shutdown would have happened 25 years ago, at the end of the 1990s. Healthcare and technology was not prepared to deal with that happening. It would have been even more disastrous. But because of our advancements in modern medicine, because of our ability to both scale technology and to allow folks to work from home, we've had a mitigation, at least at some level, of the economic impact because of the advancements in healthcare and technology. Number 2, most of the companies that are going to be affected by this shutdown in a significant way are not publicly traded. Obviously, there's outliers there, but the majority of the hardest hit companies will be private. Think about this, for example. If you're Costco or Home Depot and you sell home goods, or you're a local home goods store, well, the government told Costco and Home Depot you could stay open, and the government told the local mom and pop hardware store you had to close. So the publicly traded companies are just that. They're publicly traded. So the market, which represents publicly traded companies, not privately traded companies, is a reflection of the strength of those very companies. Think about Walmart, for example, selling bait and tackle, but if you're a local bait and tackle shop, you had to shut down, and the examples are endless. But you could see that the publicly traded markets have gone up because so have a number of the publicly traded companies, whether now or in the future. Number 3, go back with me to the end of March, just before Easter, and the market hit the lows for this coronavirus, and we were down about 35% over a 30-day period. It is virtually impossible to imagine that we will retrace and reiterate that kind of pessimism and skepticism in the markets again. We were in a dark place, both from a media perspective, but also from a lack of information perspective. And so when we look at the corporate profits predictions then, many folks were thinking that the corporate profits as a whole would drop by nearly 85%. We now have a pretty strong belief that it's actually going to be more like a 25% reduction in corporate profits because of the virus. Still significant, but not astronomical like we were thinking at the end of March by way of the market pricing that number in. Finally, number 4, and this is the most important, is that the Federal Reserve and the government has pumped our monetary system full of excess cash. So we call that the M2 supply, which is just, of all the places and all the money, how much is in our economy right now or at any given time? And that's the M2 supply. So go back to 2009. The federal government started printing money through quantitative easing, QE, and they had 3 or 4 rounds of that. And that money was given to publicly traded companies. But that money never made its way into the M2, or the economic monetary supply. It actually just went to shore up balance sheets and meet excess reserve requirements. But today, the exact opposite has happened. Balance sheets were so fat and the economy was so good prior to the coronavirus that the M2 supply of money has exploded. In fact, we have a larger increase over the last year and year to date in the economic supply of money than at any other point in U.S. monetary policy history. These 4 reasons are just some of, but they're the main ones why we've seen the stock market go up in the face of negative information. Let me leave you with a caution. While we believe if you fall asleep today and you wake up December 31st that the market is actually higher than what it is today, we think there is a tremendous amount of volatility between now and then, both in the reopening process and with the pending election. So, caution is important, but optimism is beginning to get in the air. Thanks for watching. I'll see you next time.